Okay, good morning, good afternoon, good evening, whenever you're getting this. I thought I would start doing some pre-recorded revision sessions because we don't know if we're going to get any face-to-face revision lessons. So I'm going to start off now with calculations. So I've marked all of the in-class mocks so far for my group, and I spotted there were some marks missing on the calculations. Now, in year 11, we'll be covering some more advanced kind of maths you have to do. However, I'm just going to recap some of the basics because regardless of if you're good or bad at certain sort of writing questions, there's always a certain amount of maths involved. And if you can practice these and understand how to get it, there are some easy marks to get. Okay, so what I'm going to do is hopefully when you get this, I should have attached a file to this with some questions for you. So let me just share my screen. I'm going to share my whole screen. Okay, and we've got here a number of questions, all calculations questions from practice papers, and you might recognize a couple from your mock. Okay, so what I'm going to do, I'm going to go to our presentation, remind you about certain concepts, then we'll come back to this and work our way through these questions as we go through. Okay, so bear with me. Finance. Oh, it's downloading now, isn't it? Hope you're all having fun at home. Right, so first of all, our objectives there. This comes straight from OCR. No, sorry, not OCR, edXL. Please ignore me. So this is what you need to be able to do. You need to be able to understand the concept of and calculation of revenue, fixed and variable costs, total costs, profit and loss, and interest. And some of you might be looking at thinking, oh yeah, no, that's nice and easy. However, sometimes they try and trip you up. They try and trip you up in the wording of the question. So work out the percentage of profit of this. And this is where it's quite easy to lose a couple of marks. Okay, quick little recap. So revenue, you can see there, is basically the money earned by a business over a set period of time. Revenue is not necessarily profit. Okay, well, it's not profit. Revenue is basically the money coming into the business, normally over a set period of time, so it could be a month or a year. How it's calculated is price times quantity. Price being the price of each particular unit of an item or maybe a service, and quantity is the quantity sold. Okay, I'm going to ignore those questions. We can just ignore them. Okay, so business revenue, it's also known as turnover. Okay, you have total revenue, you can have sales revenue, because sometimes you might have revenue from different kind of sources. But for the purposes of what you need in the exam for the first paper, it's basically your sales revenue. Okay, so for example, if the price is £35 and the sales are 250 units, all you do is you multiply. You could multiply, or you could even multiply £35 by 250. Now, just a reminder, you are allowed calculators in the exam. It's really important. So if you've got a calculator with you, you can see there the revenue there in this particular example would be £8,750. Okay, so sometimes we see a chart like this. Okay, so what we've got here on this chart, on the y-axis is the revenue, the amount of money coming in, and on the right hand side, if I shift this little thing out of the way because I can't see it. Okay, oh, where's it gone? Can I do it? Minimize. There we go. Sorry, is your output. Now, what it means by output is is the number of units sold. So it could be a physical item or it could be services sold. Okay, so as you output more, and output kind of varies. As you output more, you sell more, so your revenue is going to go up. So your total revenue is normally a line like that. Now, realistically, as you'll see in businesses, that gradient would not be straight. It might go up and down, but I think for the purposes of GCSE exams, more or less, it's going to be pretty straight and easy to read. Okay, so next thing we need to work out is costs, because in order to work out profit, it's our revenue take away costs. And this question in the exam, a lot of people couldn't identify fixed and variable costs. So this is some basics we need to go back to. So fixed costs, you can see that our costs are So we say costs or expenses incurred when running a business. Anything we have to pay out. Fixed costs do not change as the output changes. So it doesn't matter regardless of, let's say you're a factory which makes shoes. Okay, I always use the example of shoes. Let's say if you've got a demand and you've got an order, say 6,000 shoes one month and 1,000 shoes the following month, it's got a quiet month, the fixed costs don't change. Okay, so these would be stuff like paying rent on your mortgage on the building where you are, or it could be insurance. It could be insurance on the building. I think it might be maybe the salary of some of the staff, and there's a difference between salary and wages. Salaries is a fixed cost. You know it's going to cost you every single month. Okay, so fixed costs, you always know how much they're going to be. Okay, could also be stuff like your broadband connection, that sort of thing. We know how much that's going to be. On a graph, you can see there the fixed costs remain the same. It doesn't matter what the output is. Okay, so we know how much our fixed costs are going to be. So as we produce more shoes or less shoes, that cost doesn't go up and down. Variable costs change depending on how many, in our example, how many shoes we actually physically produce. Okay, variable costs change as the output changes. Okay, now the examples there include wages. Now wages are different. So wages might be, well, we've got to make 6,000 shoes this month. I need so and so to work extra hours, or we need to take on somebody else temporarily for a month. So we have to pay more on our labor. Okay, wages are different, where you pay per hour essentially. Salary would be something like a manager, where he or she will be working all the year through, all the time. They're a permanent employee. They get the same amount every single month. Okay. Raw materials. So in the example of the shoes, if we need to produce 6,000 pairs of shoes, we're going to need more rubber, more leather, more laces, and so on and so on. Okay. Other examples of variable costs. Okay. Well, if we're producing more of these items, our machinery, so, you know, it could be our drills or whatever, our electricity is going to be used more. So that is going to be a variable cost. You might find utilities such as water. Okay, these sort of things are examples of variable costs. It depends. Okay, it purely depends on how many items you're making. So, for example, it could be packaging materials. So we're going to send all these shoes out. You're going to need more boxes, more packing, more, you know, that sort of thing. So those are examples of variable costs. Okay, and these are all things which we can plot on the graph. So you can see their variable costs. It starts at 0. It's in the bottom left-hand corner where the two axes meet. Okay, if you're not making anything, it's not going to cost you anything. Okay, and so that is why the variable cost line starts at the origin. Okay, so if you don't make anything, it's not going to cost you any materials. The more you make, the more the costs go up, and you can see there the gradient is pretty flat there. Okay, so quite easily, total costs are the full costs of running a business. It is the fixed costs plus the variable costs. Now, it's quite an easy concept. However, you've got to bear in mind the question. So sometimes a question asks you, what would be the costs over a month or 2 months, or and that sort of thing. Okay, so there's an example there. It says a business has fixed cost of £18,000 per year. The business makes 35 products that cost £25 each to make. What's the total costs? Okay, so pretty straightforward. I've got a calculator in my hand. I haven't done this before. So first of all, let's work out our variable costs. And we know our variable costs are the number of items sold multiplied the cost. So we've made 35 products, £25 each to make. So that's 35 times 25. Can't do it in my head because I'm rubbish like that. £875. That's our variable costs. Okay, and then our fixed costs are 18,000. So we add that together. So 18,000 plus 875. Okay, £18,875. Okay, relatively straightforward. Okay, so on a graph like that, you can see our total costs. Okay, basically they run the same gradient as variable costs, but they start at our fixed costs, because our fixed costs are always going to be the same even if we produce 0. Okay, so the total cost line is always parallel to the variable cost line. It's always good to use different colors to show this. Okay, we're just going to talk about profit and loss, and then we'll look at some example questions. So revenue is, your profit is when your revenue is greater than your costs. Okay, so you got more money coming in than there is going out. Okay, loss is the other way around, where you've got more costs, more going out than revenue. I think most of you understand that concept. Pretty straightforward. Okay, so how do you calculate profit? Total revenue, take away your total costs. Simple as that. Okay, let's go back to this. Okay, so before we move on to interest, let's have a look at some examples. Okay, here we go. So I'm going to work our way through this. Let's get rid of that because it's in the way. So use the information below, calculate the total cost for the business. You are advised to show your workings. Now, the reason it does that, you'll see, well, when I do show you the mark scheme, what I do now, it awards you 2 marks for getting the correct answer. That's great. However, if you get the wrong answer, but you got the right correct workings, you can still gain a mark if you made a little mistake. An example of this is when I did these questions before we started, and as I was going through the answers, I realised I'd done a little typo or I didn't read it properly, and I got the wrong answer. So it's really important you show your workings, even if you're really confident. It's really important. You can still get a mark if you just made a silly little mistake. Okay, let's go back to this. So we've got to, all we need to do is work out our total costs. So I always do. I start off with my my formula. Total costs is equal to fixed costs plus variable cost. Okay. Our fixed costs there are 1,100. Oh, see, there's a little mistake straight away. 1,100. And our variable costs are, well, it's the number of items sold, number of units sold is 240, multiplied by the cost. Now, look carefully at this. Sorry, number of units sold multiplied by a variable cost per unit. In this case, it's 45 pence. And you know that's there to trip you up, because a lot of people are just going to multiply it by 45, but that's wrong because we have to work in pounds. So 45 pence is actually 0. Oh, I'll put a pound sign in as well. 0.45. Okay. There we go. Total costs is equal to, okay, I've got the answer. It's me, £1,208. Okay. Now, in my example here we go, there's our answer. And it's always important you make your answer very, very clear. For this example, I've just typed up on the screen, but you will see there will be a dotted line of space for you to put your answer. It's really important you put it there. Okay, couple of reasons. Number one, the examiner knows that's your final answer because you might be doing workings everywhere, blah, blah, blah. And I think I've been quite generous when marking my mock exam, well, my practice exam, say, okay, he or she's got the answer there. Yeah, I'll give them a mark for that. But your examiner's then going to be that patient. So it's really important you put it on that line. Another thing as well, it also tells you what it should be in pounds, percentage, units, or whatever. Okay, as I said, for this example, I've just put it there just to say, because I can't actually write on the line there. Okay, so that is total costs. That's interest. We'll come back to that. Okay. Break even, we'll come back to profit. Here we go. Question 6, profit. So there's information about a small business for 1 month. The business sold 270 units in this month. It's very quick to just fixate on this table here and ignore what's been written before, because that's a very important number there. That's 270. Always good to highlight it. So we need to work out profit. So we know profit is equal to TR, total revenue, take away TC, total costs. Our total revenue, okay, well, how do we, actually, I'm going to do this next. So total revenue, do a separate one, is, okay, number of units sold, which is 270. I use a star to multiply because it's a computer science sort of thing, multiplied by our sales price. Okay, 270 multiplied by 200. Okay, and I've done this before. Blah, 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 blah. I think that's right. 270 times 200. Oh, there you go. Well, that comes to £54,000. Sweet. Okay. Total costs is our fixed costs plus our variable costs. Okay. Okay, so that's going to be what you can see. Our fixed costs there are 2,100. Okay. Now, our variable costs, okay, it is the number of units sold, which you can see 270, multiplied by the variable cost per unit, which is £110. Okay. So altogether, that comes to 3,100, 800. So you got our total revenue 54,000, total cost 31,800. So now we work out our profit. So profit is equal to 54,000 take away 3,1,800, and that comes to 22,200. Okay. And once again, you can see there, you've got the dotted line for you to put your answer. Okay. That's not the only way you could do it. There's different ways you could do it, but this is the way I've attacked it. And yeah, on the mark scheme, it says, I think it's worth 2 marks, I think. Okay. But as I said, it's very easy to make a little mistake there. Just make sure you put your workings in there. That's a percentage. We'll come back to that. Margin of safety, we haven't done that yet. And cash flow, we haven't done that yet. Okay. Okay. So nice and easy. Revenue, costs, profit, that sort of thing. Let's go back to this. Okay. Now, interest is a big part of the calculations. And some people get it, some people don't, and there's multiple ways of doing this. So it's used, especially when it comes to sources of finance. So if you get a loan, be it a personal loan, for you at home, if you want to buy a car or whatever, or a business loan, the banks want something in return, so they want a bit of money back. Okay, so what normally happens is they have what's called an API, an annual percentage rate, and you can see there it's the interest payable on the loan each year of the loan. It can be quite complicated in the real world, such as what's called compound interest. So basically you have interest per year and then get interest on the interest and stuff like that. You're not expected to do that for GCSE. Okay, so you also have interest on mortgages, but it tends to be of a low rate because it's over a long period of time. I think I'm going to skip through this to an example. Okay, let's get rid of that. So let's go back to our examples here. So which one's that one? Okay, it's a nice easy one. It says look at figures 1 and 2, but they're not here. So you can see it. If I was writing on the paper, the answer's got to be in a percentage. We put on the dotted line. Okay. So what have we got here? So question 2. Okay. So we've got the scenarios that they want to introduce contactless payment system. Can they afford it? And this is where I made a mistake. So I thought it was 4,000 rather than 4,500. So the cost of a contactless payment system is 4,500. Neil and Sue plan to borrow the money from their bank. They will repay the loan over 3 years. So it's important stuff. I'm going to highlight that. That's how much money they want to borrow. They're going to pay it back over 3 years. Okay. Then it says their monthly repayment is £136.50. Okay. So what that means is the bank is going to give them £4,500. Okay. There you go. Have that. Just pay us back £136.50 a month for 3 years. Okay. So what will happen is, as we're going to figure out, when you add up how much they pay back, it's going to be more than what they've borrowed, and that means the bank gets some money in return. All right. So it's asking here is calculate the total interest Neil and Sue will pay. So it's not asking you to figure out how much in total they pay it back, because it's going to be more than 4,500. It's how much interest they'll have to pay. So that's the first part of it. And then it says as a percentage of the total amount borrowed. So there's 2 parts of it. Okay, so what we need to do first of all is figure out how much they're paying back. Okay, where's my cursor gone? So the way I'm going to do it, let's figure out how much money they're paying back over 3 years. So, what am I doing? I'll do it. So total payments over, not 4, 3 years. Okay, so it's going to be how much they pay per month, which is £136.50. And then you multiply it by how many payments there are. Okay, so this is where some people might trip up and just put 3. Okay, but that's not right. They're doing a monthly payment. So 12 months in a year, 3 years, 36 months. Okay, so in total, they will pay back to the bank £4,914. Okay, so that is the total payments. What we need to work out now is the total interest. So in other words, how much more have they paid the bank compared to how much the bank gave them? So total interest equal to, well, how much they've paid, which is, 4,914. Okay, and we take away how much they borrowed, which was 4,500. And that leaves 414. So basically, they've paid the bank have made £414 out of them. It's cost them that much. Okay, I'll just have a quick sip of coffee. Okay, right, okay, so we're halfway there. So now into this idea of working out as a percentage. Okay, so there's multiple ways of doing this. Okay, when you want to work out the percentage of something, the way I think about it is something divided by something. Okay, if you want to find the percentage of something, so you divide. So what I'm going to do is take the interest, which is £414. And we divide it by the total amount, which is 4,500, I think. There we go. So I'm just going to put a little thing at the start to say interest as a percentage of amount borrowed. Interest on the left divided by amount borrowed. Okay, so that becomes that. So you divide it and you're going to end up with a decimal and you multiply it by 100. Okay, and what I'm going to do it on my phone, on my calculator, because the one I've got printed here, I'm not too sure if it's correct. So it's going to be 414 divided by 4500. Okay, that gives me 0.092. Okay, you can probably know off straight ahead, so you just multiply that by 100. It comes to 9.2%. Okay, so that would be the interest as a percentage of the amount borrowed, because 414 is 9.2% of 4,500. I mean, I suppose an alternative way of doing it, you could do 100 divided, I think this is right, 4,500. You multiply that by the interest 414. That might be wrong, I don't know. Let's have a look. As I said, there's more than one way of doing it. So 100 divided by 4500, that times 414. Oh, I've done that completely wrong. Let's try that again. 100 divided by 4500, zip to that, times 414. Yeah, that comes up as 9.1999 recurring. As I said, there's different ways of doing it. Okay, let's get rid of that, just save any confusion, but that's the way I do it. Okay, so that's working out the percentage of something. Okay, so the answer is 9.2%. Have we got any more as a percentage? Yes, we do. Okay, done that one. This is a good one as well. This is a difficult one. Well, it's not difficult, it's just in the wording where you might get a bit confused. So figure 1 shows excuse me. Figure 1 shows the change in revenue of a business over 3 months. Okay, so we have our revenue in pounds. Okay, January, that much, February, that much, March, that much. Easy, straightforward. Using information in figure 1, calculate the percentage increase in revenue between January and March. Okay, so percentage increase in revenue between January and March. Okay, so what we need to work out first of all is the increase in revenue. Where's my little cheat sheet? How did I write this out? Okay, so what I'll do is January revenue. How much was that? Okay, should be able to read a graph. £5,000. Okay, we don't need February because it's asking between January and March. So we just need to now have the March revenue. You can see there it is £7,000. Okay. We need to know the difference between, because we want to work out the percentage between January and March. So the difference or the increase, you can see there, was going to be, it's the difference. When you find a difference, you take the highest away from the lowest. So it's your lowest over the highest. So it's going to be 7,000. Take away the 2,000. Oh, sorry. Take away 5,000. That's going to give us 2,000. So you can see there the difference between, basically, we've earned an extra £2,000 in March. Okay, you can work that out in your head. I know you're probably thinking that's easy, right? So this is where it gets a bit interesting because it says the percentage increase in revenue. Okay, so we're saying this is where you've got that £2,000, which is your percentage in, well, it's how much how much more, but you have to use that as a percentage of the revenue, but of where? Of January or March. So in this particular instance, we're going to work out as a percentage of January because it's a percentage more than what you originally took. Okay, so when you're working out the percentage increase in revenue, you work it as a percentage of the original income, if that makes sense, the original revenue. Okay, so to work out the percentage increase, okay, remember it's going to be 2,000 divided by 5,000. Okay, because you're working out is a percentage of, when we're getting a percentage of something, so it's going to be the difference as a percentage of the revenue, and we times that by 100 to get a percentage, and that gives us 40%. Okay, because 2,000 is 40% of 5,000. Okay, so that is the answer to that one. Okay, it's quite tricky. You have to be careful about the wording here. All right, don't know how many marks that was worth. Okay, so you've got a percentage there. Right, have we got any more questions as a percentage? Ooh, this is quite a good another one here. Might as well work it through. Okay, so using the information table 2 calculates 2 decimal places the value of total payments as a percentage of receipts in cash. Okay, so first we need to work out is total payments. Remember, we as a percentage of, we divide that by receipts, and in brackets it says cash. Now look here, there's 2 different bits of cash there. Okay, so let's try and figure out how to do this. So first we need to work out is total payments. Okay, well it's £700, isn't it? £700, nice and easy. Okay, so it's going to be 700 divided by receipts in cash. So you don't include the sales due in 60 days. Okay, so it's just going to be that 1,200. Okay, because it's going to be a percentage, we times that by 100. Okay, and we end up with, and look at that, to 2 decimal places. So it's going to be 58.33%. Okay, and it's told you to do that for a reason. Okay, 2 decimal places. Make sure you do that. If you don't do it like that, you don't get the full marks. Okay, right then. Any more percentages? No. Okay, so where's my PowerPoint gone? I thought I put a break even and stuff on here. you know what? I'm going to leave this video here and I'm going to do another one to do the rest of these questions. Okay. So what we've done today, we've just recapped on basics such as revenue, costs and profit, and also interest. Okay. Interest is probably the most difficult. I'd say when you work out the interest or percentage of something. Okay. So you take the first thing, divide it by the next one, times by 100. Okay. Right then. So as I said, I think I'm going to stop now because I think my daughter's trying to get in here. Hope you're doing well. I hope this does help. Any questions, please email me, and or your business studies teacher or whatever. As I said, there's going to be another video shortly. I'll try and do one later tonight, and we'll post it online for you to access. Okie dokie. Right. Take care. Bye.